How are we
How's
doing?
it going, boys? How's it going?
How are you,
We
man?
we
Thanks for
just
tuning in or
Yeah, yeah.
joining us. I mean,
Thanks for having me, guys. Couldn't be with anyone. Oh shit. So couldn't
Ryan
be
and
with.
I literally just went over, how we were feeling about this past week and kind of what's been up. And we both know that you're over there in Costa Rica. So let's just pass it right over to BD, man. How are you doing on this Saturday? And how's your week this past week been for you? I'm sure similarly to me, you experienced a bit of volatility at the end of the week.
Yeah, yeah. First of all, thanks for having me, guys. Right now we're in Costa Rica. It's a great place. I live in Toronto, Canada, so I'm escaping the winter, the snow, and coming to the tropics. Especially
there you go.
after seeing the portfolio drawdown, there's nowhere better to hide and escape the red days. Yeah, I mean, we're seeing some cracks. I'm just gonna jump into it. Yeah, we're seeing some cracks in the AI trade. I don't know if the AI bubble is popping, but there is some gas being let out of the bubble, and we saw that with Oracle earnings. We saw that with Broadcom earnings. Despite, in my opinion, I think the earnings were good. I just think investors are a little skeptical. We have this. Broadcom has that big deal with OpenAI, and there's a huge backlog, and now investor sentiment is like investors are worried if that backlog is actually going to end up working out for them. And then, of course, Oracle, too much capex, over leveraged, way too much debt, and well, yeah. Now people are wondering if Oracle will even survive, or if that would be the first company to go down in this whole, AI bubble pop. But in my opinion, if I was an investor right now, I personally wouldn't invest in Oracle, and the reason why I think is because if you look at the CDs, which is the default swaps on it, there there's this one of the highest because a lot of these institutions and hedge funds, they're buying insurance on Oracle. So if Oracle defaults or goes bankrupt, well, they're protected. So that's just my opinion.
Well, BD, let me ask you this, man, because I'm invested in tech. Ryan is, Ryan, I don't know how, I don't even know if you, maybe it's just your S&P position that you have
Well,
in tech.
no. Hold on. I've got Clear Secure, which by the way had a crazy week. Just this week, Clear was up like 20%. Like Friday to close out the week, it was up like 13%. So that's my like direct tech investment. But I do want to say, I've actually been listening to Watsco, which BD, I don't know if you're familiar with that company, but Watsco's a distributor of HVAC products, so heating and air conditioning units, stuff like that. Very, on the surface, it seems like a very boring, sleepy company. But I'm listening to their like Investor Day, which they do every few years out in Miami. It's like a 6 hour event, but I'm only about 40 minutes into it. But they're talking about how just all the ways that they're implementing tech and AI into how they do what they do, and they have all this data on their customers and the customers of their customers that goes back a long time. And so, I mean, this company is getting pretty tech heavy. So I do have a lot of all that's to say, I do have a lot of companies in my portfolio
It's
that
not
utilize tech.
directly tech though,
It's
but
not directly
I'm
tech. It's tech adjacent. It's tech
It's
implementing.
like
I
So
backdoor
wonder.
tech,
See, I wonder
right?
backward. See, I wonder if these companies will work out because, okay, you're saying it's an AI trade, right? But when the AI boom happens, is the stock following all the other AI stocks? Like if AI stocks are going up 10%, is that stock also up green 5%? No,
no,
right?
no.
So it's not technically AI trade. But look, Ryan, I'm not gonna shoot you down because I'm kind of agreeing with you where it might be time to buy boring companies next year because I'm not saying AI is going anywhere. I think AI is gonna cool down because we have some of these AI stocks that are up like 60 to 80 to 100. Even these small caps are up like 200, 300%. That can't go on forever. But I'm not saying that they're gonna crash. But I'm saying people are overlooking these other companies that are sold off. Like we have these blue chip, software companies, Adobe, Salesforce, Duolingo, all of these companies, they had the narrative that AI was going to destroy the business. But when we're seeing quarterly revenues beat and constantly beating earnings, that's not AI disrupting these companies. So I think investors should start paying attention to these sold off SaaS companies, maybe even some of these healthcare companies. I don't know, Ryan. You tell me. You're an expert in these value stocks.
Yeah, I mean, to your point, it's interesting. Some of these companies, Broadcom is one that jumps out to me. I didn't really spend too much time listening to their earnings, but one thing that I've noticed, not just with Broadcom, but this happens with a lot of companies, is that they'll still put up like what are objectively good numbers, like still like pretty crazy revenue growth, still pretty crazy earnings growth. I think when I was looking at Broadcom briefly, they said they still had a backlog of like billions and billions and billions of dollars that they needed to
I
fill.
think until
And
2028, right?
yeah, it was something like that. So it's always crazy to see, what on the surface looks like really good numbers and then see the share price pull back as a result of it. And typically what happens is it's just not obviously not living up to expectations, but is that mean it's a bad investment? I don't think so. I think you got to be careful putting too much weight on what the analysts think are going to happen, because at the end of the day, none of us can predict the future. And I think generally speaking, if a company's still growing, double digits on the top and bottom line, and with Broadcom specifically, has the backlog that they do, seems like it's firing on all cylinders to me. And I think, I kind of liked what you said a few moments ago about, because one of the biggest questions right now is, number one, is there a bubble? And number two, if so, where are we at in the stage of that bubble? Is it getting ready to pop? Blah blah blah. And as time goes on and it moves along, I think in this we see this impacting share prices too. People get really sensitive after things run up so much. As the share price continues to go up, sensitivity also goes up, and so we'll see these bigger swings or these bigger reactions to whatever news that comes out. But I liked what you said earlier. Nobody knows whether or not it's a bubble. You really only know that with hindsight after the events play out. But no matter where we're at, it does seem like there's a little bit of gas being let out. I think that's how you word it. A little bit of gas being let out of this thing, whatever it is, whether it's a bubble or something else. So I liked how you phrased that, and that's probably the best way to word it.
This is actually the direction I wanted to head in with BD, because I'm probably more of a moderate here in terms of like tech, right? And BD, you're like all in with tech, and we've spoken before about kind of the necessity to be, a little bit riskier. If you're younger, you can afford that risk. But it's a scary time right now to kind of look at what's going on with this bubble, seeing the Broadcoms of the world, letting out some gas, so to speak. So heading into the new year, is this what we're seeing now, the AI bubble scares, a reason to really be concerned, or is this perhaps the reason to really double down?
Good question, Ari. Like, it's hard to tell, but the way I see it, we are in a rate cut cycle. We do have a new Fed that's going to be coming in the new year around May. That's going to be, even more dovish and cutting rates. So one thing's for sure, we are going to have, cheap money into the markets. I would say with AI, the number one thing with AI, these AI companies, is they're borrowing money to invest back into their own companies, invest in AI infrastructure. So if the money is cheap, there's no problem there. Now the problem I see is there a return on investment? And I think I said this last time we had a conversation, is we're not seeing any real return on investment, which is they're spending millions and billions and trillions of dollars just for ChatGPT to tell you, what to eat for breakfast, right? But once we can see, some actual stuff happening with AI, and I think they are. Like, there's certain things they keep hidden from us, but in the backgrounds, we are seeing companies save a lot of money. And it sucks to say they are, firing a bunch of people just to save on costs of, expenses on salaries. So in that, on future earnings, we are going to see better earnings results because of that. Now, in terms of, I think, going out for next year, I think what we're going to see, and this is my prediction, obviously not financial advice, I think we're going to see a slight correction. It's also midterm presidential years, which are, historically a little rocky. So what I think is going to happen is a couple companies are going to see, actually most AI companies, tech companies are going to see some drawdown. Maybe we get a correction, maybe we get a crash, I don't know. But what I'm doing in my portfolio is I'm starting to trim out some of these high risk, high beta companies, small cap companies that I'm not 100% sure will survive if the bubble does break, right? If the bubble does burst, will this company survive? It comes back to the dot-com cycle, right? What we saw a lot of companies, bullshit companies, they went bankrupt. We never heard about them again. But certain companies like the Amazons, the Googles, the Apples, even Cisco, they all survived. And Cisco just went back to all-time highs. The high it made during the dot-com bubble, the peak. So I am seeing, some memes going around that, hey, if Cisco just hit all-time highs, is this the sign that the bubble, we're at the top here? But my advice is to really know the companies you invest in. Like, you should know them with the back of your hands. If you were put on the spot and told to answer 5 questions, you should be able to answer. If you can't answer, even the basic questions of what that company does and how their earnings are performing, then you should not own that company and you should most likely try to sell it. But for me, there are certain companies that I'm definitely not going to be selling. Like, I'm not selling like the AMDs, the Google, the ASMLs. These are the backbones of, AI data infrastructure. And you know what? If anything, I welcome a correction. I'm trying to have a 10 to 20%, maybe even 30% cash position. So when the time does come, I'm ready to pounce and jump on this.
That's crazy, man. So 20-30% cash position. I think, and correct me if I'm wrong, but I think your portfolio is right around $500,000 or something around there, maybe a bit more. So, going into whenever this correction does occur, which obviously we never know when it will happen, but man, you're trying to be sitting on 100,000, 150,000 in cash, something like that. Wow, that's awesome.
Look, majority of the time, man, the most money I've made was during market crashes.
Yeah.
And I'm not saying that I want to completely, like, it's hard to, I'm not going to lie to you guys. It's kind of hard to start selling off some of your positions knowing that this either works or it doesn't work. So I'm not advising it to anyone. But what I'm saying is some of my stocks have like done 100 to 200%. I can't be greedy in holding those stocks, right? Like at a certain point, you have to ask yourself, like, am I being greedy? Like 100 is even a 20%, even a 40% return is great. If you're making a 40% return in a year, which the S&P doesn't even do, like, people need to realize, like, hey, maybe it's time to trim the fat, maybe sell the entire position. So that's all I'm saying. Like, I'm just trying to reduce my risk here, because you're right, majority of my portfolio is tech. But what I'm also doing is I'm rotating that money into healthcare, like Novo Nordisk, which is a sold off company, excellent dividend
very much so.
excellent fundamentals. I was looking into Lululemon, but they just fired their CEO, but it's still risky because it is an economic stock, right? You don't know, maybe the consumers is weak next year. Other companies I saw Procter and Gamble is sold off, but I'm not gonna go for that. It's a little too boring for me. But I do have my eyes on a couple other value companies that kind of move with the market. So I don't want something too slow, but I do want something of great value, and that's not really related to the AI trade.
Yeah, I think one thing I'm kind of taken away from this so far is you have, and I think this is important for every investor to think about when it comes to the positions in their portfolio. You have a plan going into these stocks, and that plan is different depending on the company. Your plan with ASML and Alphabet and AMD is different than your plan with some of these other ones that you mentioned. You look at some, if I'm getting this right, you're looking at some positions in your portfolio as quote unquote forever holds. You're buying and holding them for the long haul.
That's right.
Versus maybe there's some other ones where you're buying them just because you want to squeeze some juice out of them. You know that there's something there to get, and you're going to get in and out once the juice is all squeezed out. Hopefully, right. But that's the intent, right?
No, yeah. I mean, I have some long-term positions, then I have some swing trades, and then I have just some what I like to call moonshots, meaning, buy the rumors, sell the news kind of stocks. So, like, I am a trader as well. So, if I see an opportunity in some of these high-risk stocks, I'll take it, right? But again, that's my fund money. So, like, I allocate 10% of that, 10% of my portfolio to just the fun, risky stuff.
BD, I was pretty surprised, man, when I saw on Blossom, which, by the way, this podcast is powered up by Blossom. So if you don't have Blossom, you got to download it. You got to get on Blossom. Follow all three of us, see our portfolios transparently shared. But I was like pleasantly surprised when I saw some of the holdings that you were selling off. And Of course, it makes more sense now that you're sharing the returns that you had on some of these positions. But my question still comes down to like how, for me, I see wins and I'm like, you know what? Like at least the holdings that I have, Alphabet's a good one, right? I'm like, hey, this is literally going to be just, a forever hold really for me. So I'm not going to trim down on that one, though I saw crazy gains with it. So how do you wrestle with the idea of like, when is the ideal time to take some of those profits? Like, yeah, you can say like you saw 200% return, but like the next question always comes down to, maybe Ryan, you've wrestled with this a lot because I have, but it's like, well, maybe it can hit 250, maybe it can hit 300%.
Yeah.
I think about that, and it's honestly the easiest thing to do is buy. The hardest thing to do is sell, especially if it's a winner. Like if there's a stock that's losing, you're like, all right, I'm just gonna cut the loss. But for me, it's never been so difficult to sell. Like I just the stock you're talking about, I think I just trimmed some of my Nvidia, and that one was a hard one because it is one of the top Magnificent Seven stocks. But the way I looked at it was Nvidia is one of the leaders of the AI, so it has done very well for me. And if AI was going to have if the bubble was going to burst, Nvidia, the leaders normally die first, and then the betas follow. And also, just there's too much skepticism on Nvidia right now. You have Michael Burry shorting that stock. And then I looked at it in my portfolio. It wasn't the largest position I had, so it kind of made it easier to trim. But when it comes to every other stock, it's easier to sell the moonshots because they can run up like 50 to 60%. But I just go back to the fundamentals. Like there's still some of these companies are still trying to become profitable, and if the road looks rocky ahead, I might as well cut them loose now before they start biting me in the ass. And I've seen that. It just comes from experience. Like I've been investing for 7-8 years. I used to tell myself, I love this stock. It's up 80%. What could go wrong? Well, the stock fell like more than 100% during the bear market, right? And that 80% gain turns into a 50% loss. So it just comes back down comes from experience and losses and wins. And I hate to say that I'm trying to time the market, but as someone that's doing high risk, you have to stick to your discipline. No matter, like, you can't fall in love with a stock. I fell in love with many girls, and I fell in love with many stocks, and they've all broken my heart. So this soldier, this soldier has trauma. I can't. Yeah. There's no other way to say it other than it just comes with repetition.
I love that, man. Ryan's married. He's got a kid, and he's got value stocks. Maybe it's something with me and UPD.
But you know what? Like the amazing, see, from the outside in, with all my posts and all my videos, it looks like I'm a tech investor. But if you actually dissect my Blossom portfolio, which is amazing about Blossom, is you get to see who a person truly is and what their risk appetite is. If you see, one of my largest positions is the S&P 500 index, the NASDAQ 100. That makes up about like 10 to 20% of my total portfolio. And my whole analogy behind that is, I look at my portfolio like a house, and if I'm gonna have a bunch of risky stuff, I want to build that portfolio on some solid foundation. So my solid foundation is ETFs, a couple value dividend stocks, and then that's my foundation. That's my base layer, and then I'll lay my tech stocks and my high risk stocks on top of that. That way, even if let's say I owned Oracle and Oracle's down like 15% on bad earnings. Well, if the S&P 500 is still going up, and all these value stocks are still going up, that protects me from the downfall, right? So I always say, like, if everyone should invest in ETFs. I think they're like a key part of your portfolio.
Yeah, I definitely think that's true for people who are just getting into investing. I just made a video about this, actually. I think if someone is just getting started, brand new to the stock market, I just think it makes sense to just start with ETFs. Start, dip your feet in that pool, start walking before you can run. It's tough though, because, and this is like kind of we talk about this from time to time. This is kind of the double-edged sword of social media and all of this investing stuff being so prevalent now and everywhere. On one hand, it's good because it's getting more people into investing and into the market. But on the other hand, a lot of people getting into this for the first time, seeing, me buy something or Ari buy something or you buy something, and that pushes them into buying these individual companies that maybe they don't have much business investing in the first place. And ultimately, I think it's a net positive, but on the other hand, it can sting people.
It also does suck because sometimes I'm just like I'll have let's say I have a stock and I probably bought it so cheap and I'm probably up 100%, and now I see maybe like a 5 or 10% drawdown, and then I'm buying, and then people get that alert on Blossom. They're like, oh well, BD and Ari or Ryan bought this stock, let me buy it, right? It must be a good time. Why else would he buy it? But then they forget that I'm already up like 40, 60, 80%. So our cost basis will be different. And you're right, that is the sucky part. But people also should go and look at my portfolio and see, well, BD is up this much on this stock. Maybe I should go and do my research. So it does suck because this is the world we live in. And I'm a TikToker, I'm an Instagrammer, and we give people this quick dopamine. And people are so addicted to quick answers, and now ChatGPT even makes it worse. So no one's really out here going to go and learn and look at my deep dive on the stock. And I post a deep dive on almost every stock, whether it's on Blossom, on Twitter, on Instagram. I'm always going through. I don't just buy a stock, make a video, and pray to God it goes up. No, there's research and fundamentals and even technical analysis behind it. And I advise everyone to do that. Like, I've met so many people, like, I've been in this game for like 7 years of content creation, and even myself, I wasn't as educated back in the day. And even the finance, the world, the people, the retailers, we weren't as smart. But now, thanks to all the social media and the big push, and finance is finally cool again. Investing is finally cool again, and now everyone is becoming so much smarter. Like when we were at the Blossom events, just the people we were talking to, like, they have such strong knowledge on the companies, on the fundamentals, and just investing as a whole, that I feel like to just go and research a stock on Twitter or Blossom or any social media, you will find great, explanations and thesis to do research. So I advise people, like, if you're going to go invest in a stock, just go do a quick search on social media. And I'm sure you'll find at least 60 to 70% of those posts will be much better than they were a couple of years ago.
Yeah, it's definitely. Go ahead, Ari. Sorry, man.
I was gonna say, I'm so happy you said that, because I did see your posts, or the alerts rather, BD, when on Blossom, when it was like BD's selling. I was like, oh, what's he selling? And I went to go look, and here's the reality though. Like what you shared, I think happens a lot. Someone makes a video, someone makes a post, or they get the alert on Blossom. You're selling, Ryan's selling or buying, right? Whatever it is, and they follow suit. When I saw that you were selling, the only thing that I did was I stopped in my tracks. I said, why at this particular moment would he be selling? And then I went to the drawing boards to try to figure out whether or not it would be ideal for me to do that. And so here's the reality is, like, I want to say, playbook, investing playbook, or your strategy board is different than mine, right? You may have a different thesis or reason than I do for holding that company or selling that company. And so it's so important, I think, to double down on this, what you were already sharing. Do your own research, because I think a lot of the times people look at, the amount of followers somebody has, right? So we all have, thousands of followers. And so all of a sudden, we're kind of in the position to look as if, we know exactly what we're doing for everybody's portfolio. Just follow us. And that's the farthest thing from the truth. I think it gets a lot of people in trouble. I'll out myself in sharing this. When I first started investing 7-8 years ago, I was watching a Meet Kevin video. And I was also starting out, by the way, like just dividends, dividend stocks and ETFs. And I forgot I think Meet Kevin was talking about, like CarMax or something, one of those car companies. And I was like, F it. Let me throw in like a couple $100, see what happens. Dude, I lost it all. So it just goes to show that, like, you can't be a moron out here. You got to do your own research. If you're new to the game, go to the ETF route until you then understand, I think, two things. One, how to evaluate a company. But more importantly than how to evaluate the company, and I'd love to catch your guys' thought on this, how well you can manage through volatility. Like, does your
Emotions.
stomach
Yeah.
just gyrate when the market gets volatile? Because if that's the case, even if you know how to evaluate a company, but you can't stomach the volatility, you're toast.
I always say like the investing and trading game is less about your knowledge and fundamentals and technical analysis and more about your psychology and your emotions. Like this is such an emotional game, the ups and downs, watching your hard earned money go up and down constantly, especially in like this is probably the most volatile markets we've ever seen. And some people, you're right, they just can't stomach it. Like it's so funny, but like we see the memes, but it's true. When the stock goes up, people buy. When the stock goes down, they immediately sell. And then when it goes back up again, they'll buy again. And this, I've seen this happen with people. So no, I'm so big on emotional investing, and it's something I've developed. Like I, for the longest time, I was working on the wrong things. And I'm not saying it's bad to learn technical analysis and fundamentals. That's your bread and butter. But while you're doing that, you have to develop as a human being as well. You have to develop your emotions, your mental, your whole vision, your mindset is so important. Like you tell yourself, yeah, I'm gonna hold this stock for 10 years, but the minute the stock moves down, all of a sudden you become a day trader. So no, I agree
Yeah.
with you, Ari.
That's a great point. We talk about this from time to time here on the show too. In investing, it's a journey of financial development and wealth building, but there's also a lot of personal development that has to come along with that, or else you'll get wrecked, you'll get crushed. And I think this is partly why too I've noticed a lot of investors turn to things like stoicism to help them build
Facts.
that
Yep.
that resilience. And this is a question, I'm sure you guys get this too. I get this question all the time. How do you deal with that? How do you deal with, seeing your share prices go down or, just, swing like crazy sometimes? And I think, the easiest solution to that for anyone who's feeling that is just kind of, getting the knots in their stomach when they see this volatility. I think the easiest thing to do is just turn it off. If you're a long-term investor, and you plan on holding your assets for a long time, which you should, just turn it off. I was listening to, don't check your portfolio every day. Don't even check it every week. Maybe check it once a month, once a quarter. You set the timeline, but just turn down the volume. There's so much noise out there. There's constant news. There's tons of talking heads like us always spewing stuff about the market. And if it ever gets to be too much for you, just turn that volume down, walk away. Maybe take a trip to Costa Rica and go sit on the beach for a little bit.
Excellent idea. Take a trip anywhere.
But you're right. Like in general, there's so many different ways that we have to kind of fight against our own, human quirks that are all just hardwired into us. But it's good. I think it's a good thing to go through because the resilience that you pick up through this, you can apply to so many other areas of your life. And there's so many, investing, this is definitely something we talk about. Investing is such a great teacher for so many things: resilience, discipline, consistency, delayed gratification. There's so many great traits that come from doing this as a hobby.
Delayed gratification is probably the best thing you can learn as a human being. Like to be honest, I learned delayed gratification from the gym. So I used to work out since I was 16, and
This is a can of worms, by the way.
This is Ryan's favorite topic. I don't even know why we have the deep end investing. It should be the deep end working out.
Yeah, sorry, BD, didn't mean to cut you off.
No, I love it. No, but for real, like I started working out since I was 16, trying to get the muscles, trying to be in shape. And it's not gonna happen overnight. It's not gonna happen in a week. It's not gonna happen in a month. Sometimes it takes years just to get that ideal physique and to be healthy. And I learned that early on, and then once you finally see those gains, well, you get addicted, right? And that's the same with investing. You put on all this work. You finish your overtime shifts, you finish your 9 to 5. You take whatever money you can get, and you put that in a stock that you think will work out because you've done the research, you've done the fundamental analysis. The stock keeps going down, and you're like, well, am I dumb? Am I an idiot for buying this company? And then you go back to the drawing board, you research it, and you're like, no, this is gonna work. I'm gonna dump another $1,000, and then voila, like a couple months later, it finally works out. You're a genius. You feel good. You tell your wife, your girlfriend, see, I was right. And that's the whole beauty of investing in. And I wish everyone can kind of feel that feeling, because you're not going to feel it all the time or early on. Like I always say, the best stocks to invest in, or the best money you can make is the stock you're in the trenches with. And that happened to me recently with AMD and SoFi. I was in the trenches on SoFi for years, and I believe in that company, and the stock is doing good. Same with AMD. Everyone thought that Nvidia would eat AMD's food, and to me the fundamentals look great. I put my heart on the line. Like, I went on social media and I kept making videos. I saw all the nasty comments. Oh, BD, you don't know what you're talking about. You're washed out. The game's done. Time to quit. And I was like, no, like, I'm not gonna let the noise bother me. As you said, Ron, there's so much noise out there. To be a great investor, you have to ignore the noise. You don't think Buffett or Peter Lynch, Ray Dalio, you don't think all of them got all this hate, and they're on Wall Street. Like, just imagine your colleagues constantly talking smack about you. So at the end of the day, investing at the end of the day is a one-on-one game. It's just you and yourself and your research. And at the end of the day, when you're in the trenches, the only thing you can rely on is your skills and your ability to handle the emotions and handle the shit talk. And I'll be honest, like, and I'm sure you guys can admit to this too. Investing was way easier before I was a content creator, because then I could just mind my own business, keep my head down, invest in my stock. But now, thanks to Blossom, thanks to everything, everyone sees it. You get the constant comments. BD, is this stock ever gonna go up? Is it down? Like, what's going on? Should I sell now? And I'm like, I wish I could just like go to work and invest and go to Costa Rica and mind my business. You guys tell me what you guys think.
No, man, it's such a bittersweet thing. I think overall, I think it's a net positive though, because you really are making a positive difference in just even sharing your journey and sharing your thoughts and sharing what you're doing and documenting the whole thing along the way. I think there's a lot of power in that, and I think I'm always surprised to know that my gibberish here on the internet has like actually helped people like open up an account and start setting aside money for their future. It's a huge decision, and it's one of the best decisions they'll ever make. And just to know that I or any of us have had a small hand in that is just a really rewarding thing. And that's why you do it at the end of the day.
Yeah.
But I also want to say too, even it's important to share what you're doing. It's important to be transparent. And this is actually, BD, something you recently talked about, and I really liked this. You put out a post, and I'm going to paraphrase it. You can fill in the gaps, but you put out a post within the last couple of weeks saying something about exactly this, how important it is if you're going to be creating content to actually share what you're investing in. Did you see that one too, Ari?
I think when BD was on Masters of the Market, he even mentioned that it's important to
I made an Instagram story, right? That's what it was. It was an Instagram story.
It was something like that. Yeah.
You know what? I absolutely hate it. I'm on that point where I'm gonna be the villain. And yeah, Ari, I did say that on your podcast. I said I'm gonna start being a villain next year, and I'm gonna start calling out content creators that are not sharing their portfolio. I'm not saying that any of these creators are faulty or they're not like scammers or anything. But I'm just saying, like, we have the moral obligation as content creators, because people follow us. Like, they don't even ask questions anymore, right? I've had this before where I'll put like, 5 to 10 grand in a company, and then some guy will come and like, I just went 50K. I'm like, dude, I didn't even put 50K in that stock. What the hell is wrong with you, right? So now, I'm like, people are crazy. So I'm like, after I started seeing this, I'm like, no, I have an obligation. I have 90,000 people following me on Blossom and almost 200,000 on Instagram. And Blossom, yes, they see and they get to see the stock that I'm buying. But, with content creators, sometimes they'll talk about a stock and they won't even own it. And we're also seeing that with the whole covered call, fiasco that we're seeing. Like, some of these, portfolio managers, they don't even own the covered call ETFs that they're promoting. Same with content creators, they're promoting these covered call ETFs and they don't own it. And I think that's so faulty, because you're getting people in trouble, right? And we as content creators have that moral obligation to show our portfolio, share it, show everything that we're doing, because people are just following us. And if anything, they're probably taking more risk than you, because I've met some content creators that probably only have $20,000, invested, and that's all the skin they have in the game. And then you have their followers who are probably have $1 million, and they're putting more risk into these stocks versus the content creator that's putting no risk. So no, like that, I like next year, that's what I'm doing. I'm gonna start telling people, hey, you need to comment under your content creator's post and say, hey, are you on Blossom? You need to join Blossom. And if they won't do it, you share me their account, and I'll freaking call them out. That's my goal for next year. You guys want to
All
join
right,
me?
man. All right. We'll see how it goes for you. Maybe we'll hop on the bandwagon. We'll let you take the slings and arrows first.
Hide your wives, hide your kids, hide your stock portfolio from BT, man.
I'm coming for you. Ari, I want you to clip this, all right? This is a warning to you content creators that don't share your portfolio. BD's coming for you, all right? You either get on Blossom now or I'm going to find you, and you better hide your kid, hide your wife, hide your portfolio.
Big bad BD. Dang.
Ari, put that right now. Put that on the socials.
We'll send it to the Wall Street Journal.
The title of the video, hide your wives, hide your kids, hide your stocks. No, there's so much truth behind that, because you're right. Like, people, sometimes I have people on Masters of the Market. All right, this used to happen a lot, before, not so much now, because I do a lot of due diligence on the portfolios. It's very easy if someone's on Blossom because I can see it firsthand. But when someone has, like you said, you use $20,000 worth of a portfolio, yet they're talking about how they're invested, how much is in each holding. It's like, okay, then you have somebody else who may have the assumption that you have hundreds of thousands or at least tens of thousands invested in the company. And that's not the case. Or on the flip side of this, you have content creators creating so much content around a particular investment. A lot of the times these covered call ETFs, yet they have zero skin in the game. And I think that's wrong. I do think every content creator should have some fiduciary responsibility, because we really do have a huge voice, and people's portfolios are dependent sometimes. It shouldn't be the case, but by default it is. And I just think we need to be very careful with what we're saying. All the buy these stocks now videos, this is the top 10 list for covered call ETFs. But then behind the scenes, some of these content creators are even paid to make some of these videos, and it's crazy, man.
No comment, man. We're seeing that with a lot of content creators. They're just shilling these, not even yield max, but even some of these penny stocks. And if you're gonna at least push these companies out, at least somewhere in the video or in the description, say you don't own this company or you do own it, because otherwise people are gonna follow you thinking like, hey, I love Ari. Ari's a genius. I'm gonna do what he's talking about. Meanwhile, you don't even own it.
Should definitely be, I don't own the stock and I'm promoted to make this video. I'm paid to make this. And then if you miss that in the first 30 seconds of the video, I mean, you're the clown. But at least it has to be out there.
And like speaking about the content creators that have a small portfolio, shout out to the ones that share their portfolio, even if it's a small 20,000. Just because you have more money doesn't mean that you might be smarter or better, but it's still just being transparent. Like I've shared my portfolio since it was $1,000 back in 2020, and if anything, just showing that growth will get you more followers, because no one wants to see me. Just like if I made a new account tomorrow with my $500,000 portfolio, well, I just look like a like an asshole that's just flaunting his wealth. Versus if you saw me come along with me to the journey, well, now you feel what I feel, and you kind of appreciate me more, because you're like, well, this guy started from the bottom just like me. If he can do it, I can do it. And I've always promoted myself as just a regular guy. Like, dude, I'm an electrician, and if it's possible for me, it's possible for you. But yeah, going back to guys, if you have a 20K portfolio, don't feel shy or scared to hide that portfolio. Show it. Investing is a journey, and I promise you can show that to your friends and they'll laugh at you, but anyone that's an investor will appreciate that. We've all been there from even $100, you know what I mean?
Mm-hmm.
Right.
Absolutely. On. I think when I first started posting on YouTube, I had about $15,000 invested. I was like within a few months of first starting to begin with. So I was like a clean slate and probably didn't really have much business talking about investing at the time. But I came into this, thinking if I'm going to be talking about it, this is going to force me to learn more about it. So that was kind of one of my motivations in just starting to talk to the camera about it. What else was I going to say to that? And also it was good too, because I think a lot of us, we don't have other people. Maybe this has changed now, but back when I first started, I had no one else I could talk to about this. So this was a really good outlet for that. And I also think, in terms of creators talking about this stuff, I think how you position yourself is really important too. You touched on this a moment ago, BD, but you said, I'm just a regular dude doing this, sharing my thoughts. And that's always how I've wanted to present myself as well. I've never wanted to be the expert. I resent being called a guru, because I'm definitely not that. I'm just a dude in his house, talking to a camera in a t-shirt or in sweats about stocks. Like, I'm no one special. I'm just someone who is an enthusiast of the craft. This is one of my hobbies, and I just want to talk about it and share my thoughts and, share the wins and the losses along the way in the hopes that it inspires other people to do it too. So I think positioning is really important.
One of the telltale signs of a guru is when they say that they're not a guru. So for those listening, ladies and gentlemen, there we are, Ryan Williams.
Ryan Williams, a guru.
You just can't win, man. You just can't
guru
win.
In the sweats.
A moment ago, or I guess before we tapped into this conversation, we were talking about whether or not to share your portfolio or the holdings within it. And I want to go back to this for a quick second, because as the both of you were talking, actually the question in my head before we even landed there was, would it even at that point be a wise idea to open up to friends and family, let alone a whole community, about your investments? Because sometimes there's so much noise that what you're right about, people will convince you otherwise. However, playing devil's advocate to my own point, right, I'm sitting here thinking, well, if you can withstand the noise, you're actually going to be able to develop a stronger thesis. So I'd love to know, where do you guys fall with that line of thinking?
Go ahead, Ryan.
Okay, I was going to let you go, man. You're the guest here, but I'll take it. I think the latter thing that you said there, Ari, is really more important. I think if you can withstand the noise and if you can withstand criticism of your investments, I think it's only going to give you more conviction. It's going to force you to have more conviction in what you're invested in. And, I think it's overall a good thing. It's tough when you're going through it. It's tough when you're going through it. But at the same time, no matter what you're investing in, even something like the S&P, there's always going to be people who think it's a good investment. There's always going to be people who think it's a bad investment. And I think, sometimes we forget this. When you go to buy a stock or when you go to sell a stock, there's someone on the other end of that transaction who's doing the exact opposite thing that you're doing. If you're selling something, there's someone on the other side buying it because they think its future is brighter than where it's at today. If there's someone, or if you're buying a stock, there's someone selling it who thinks its best days are behind it. And so you really can't escape that. And like I said, I think that noise, if you choose to listen to it and keep it on, because once again, you could turn that volume down if you want to. If you choose to subject yourself to it, I think it's only going to make you better.
Yeah, honestly, I've always been a contrarian investor and thinker. So I always like to do what other people like. I always like to go against what other people think and how they invest. So if someone keeps telling me that, hey, this company is going to die, it's AI is gonna kill it. Well, for me, I get like my mouth starts watering. I'm like, this looks like a tasty deal. Like I wanna be the villain here. I wanna go against what the crowd is thinking. I never, I've always saw that if you follow the crowd or if you follow the sheeps, you're gonna get destroyed. So I always like to do the opposite. So if anything, I welcome people challenging my thesis or my investment. However, of course, I gotta make sure, as a stock picker, you gotta stay on top of the earnings. You gotta make sure that they're actually performing well. Otherwise, then you're gonna be like, oh well, I took a loss and I have to kind of agree with them. But I also gotta say that you shouldn't be too ignorant and you shouldn't think you're the smartest person in the room, right? I'm always open to I always whenever I invest in a stock or do research, I like to look at the bull thesis and the bearish thesis. I like to see why people don't like it and why people do like it, right? You can't just go into a stock thinking, no, it's only going to go up, or this is bullish, this is bullish. No, you got to see what's affecting it. If it's a retail company, or is the younger generation even like liking the product, or is there any interest on social media? So you gotta look at some of these things. So no, I'm always open to people's bearish thoughts, right? And I make myself more open to it. I don't want anyone to be scared to challenge me as well. So if anyone's watching this video, please feel free to challenge my ideas, because I'm not we're not the best investors. I might not be as smart as I think I am, right? So you might be smarter than me. So maybe your idea will kind of help me. And again, Blossom's the best place for that, where you can have those kind of conversations.
Yeah, that's a
It's
great point.
interesting.
That was a
kind
good
of
ad.
like
Oh, sorry, Ari.
I was gonna say it kind of
Go
makes
ahead,
me
man.
think about like selective hearing. Like I kind of think you should be
Yeah.
selective in which noise you're taking in. Like you almost have like an ear out for the general noise, because to BD's point, it's like, yeah, maybe someone's whispering or chattering about something that you never even thought about, and it's coming out of like left field. You're like, that's really interesting. But I feel like for the most part, it's like, especially if you have friends who don't invest and they're like, wow, you're so stupid. Like, why would you do that? The selective listening comes into like, well, how much do these people really know about investing?
Yeah.
Where are they coming
hmm
from with those ideas? So it's like, I feel like this is like selective hearing at this point. Like, where's your noise coming from?
yeah, it comes back to like what they're saying. If they're just calling you dumb and saying extremely negative things, then obviously that's just noise, because they're not going off of anything. They're just talking smack to talk smack. But if someone actually has a thesis like, oh well, this company is not good because declining in revenue and the growth. Well, okay, fine. I'll hear you out. Then I'll take that information. And I'll go do my research. But if you're just here to bash me, just to bash me, and because whatever reason, then no, like that's just noise, and I'm gonna ignore it. If you think, oh, well, oh, don't buy Netflix stock because no one watches Netflix anymore, and I'm like, dude, I just watched Netflix last night. Shut up. You know what I mean?
Yeah, it's exactly right. It's exactly right. Which again, I mean, it really goes to show Blossom is such a perfect place, because you could post something, and I feel like because of the opportunity to be so transparent on Blossom, when someone makes a comment, you can go look at their portfolio, and if they're loaded up on like any one particular stock. And it's like, you can kind of see who people are.
Oh, dude,
It's
I
such a
remember, I
perfect
remember,
filler for what we need these days.
I remember, like I just sold like one stock like last month, and dude, like people will hate on you if you buy a stock. They'll hate on you if you sell a stock. Like I sold it. Oh, why'd you sell it? Oh, you're gonna miss out on all these gains. Well, dude, you don't. And then yeah, you're right. I look at his portfolio and he's down like 60% on that stock. I'm like, well, dude, you're just a bag holder that's crying for some hope here. And I was your last remaining hope, and then I sold the stock. So now your hope's gone, and now you're not trying to convince me. You're trying to convince yourself that maybe this
Mm.
stock is good. But again, like everyone's journey is different. Like my journey is different versus yours. Maybe I sold because I need to buy a house. Maybe I sold because the rent's due. Maybe I sold because like that's all I wanted. That's how much time I wanted with the stock. I made my gains. It hit my stop loss, and that's it. So people shouldn't question every single move and put a microscope on it. Like everyone has a different reason. It's the same with Warren Buffett. Like Warren Buffett had this huge cash pile, and so many. Oh, he thinks there's a bear market coming. Oh, he thinks the market's gonna crash. Maybe he doesn't like this company. Maybe he thinks Apple's gonna go under. And people had all these theories, and then we find out that the man is just retiring, right? He's been selling for 3 years, and the market's only gone up. And he never once ever said that I think the market's gonna crash. He just said, it's my own investing plan. So yeah.
It's
Yeah,
tough. I think a lot of that comes from. You want to go?
go for it, man. Go for it. Go for it. I'll chime in after.
Okay, so sorry, man. Sorry, man. So I was just gonna say, I think a lot of that comes from, a couple places. Number one, when it comes to the stocks you own, there's this thing called the endowment bias, which basically means that you assign a higher value or a higher worth to the things that belong to you. Like this is just a cup, this is just a blender bottle, but because it's mine, it's a bit more special. That's essentially the endowment bias, and you definitely see that with stocks. And adding to that, when it comes to stocks, people, if they put a lot of thought into the investment in the first place, which hopefully they did, any sort of move that goes against that, like selling out of a stock that someone bought, it's almost received sometimes, if you're dealing with the wrong type of person, it's almost received by that person as like an attack on their intellect, or like an attack on themselves, because we kind of, for better or for worse, we can sometimes like put our identity into our portfolios, especially some of us who spend so much time in this realm dealing with investments and portfolios and talking about it online and stuff. So it's really a big part of you. And so anything that detracts from that or goes against that is almost like a personal attack. And so I think that's kind of why you see people spit fire back and forth about certain investments.
But it also comes down to like, yo, you can't fall in love with any stock or position, right?
Mm.
Look, on Ryan's point, I'm happy you actually kicked off in that direction, because it's a perfect segue from, to where I was going, which is what's really being done, I think, sometimes is we're holding a mirror in front of someone. Like when we make an investment decision, or when we do something in life that's not necessarily in line with what someone else is doing, we cause people to look at themselves and ask deeper questions that they otherwise may not have asked themselves. And sometimes those questions might be super uncomfortable. So case in point, it's like you sell out of a position and someone might be diehard in that position, but now you're selling. It's making them think about their own investment into that position. And that sometimes can be very uncomfortable, because they either have so much conviction in the stock, which circles back to the original point that we were making in the get-go. You can't be married to your stocks, right? This is not about, falling in love, till death do us part. This is, the moment you see the fundamentals change, well, your investment thesis has to change with it. But I think people get super uncomfortable with that, and all of a sudden, oh, BD's selling, Ryan's selling, I'm selling. Now someone's got the mirror in front of their face. Like, what do I do? Am I missing something? No, I'm not, because I'm the best investor since sliced bread. So they're wrong, I'm right. And I think that's sometimes what happens until, well, you see where they're at with their portfolio and they're down 60, 70%.
Yeah, I think it's good to have the intent to be married to your stocks. I think if you go into it with that in mind, I'm going to hold this thing as long as I can, I think that's good. I think that's a healthy way to think about it. But to your point, Ari, you have to balance that with the having the objectivity to know if it's time to cut and run. And it's also, with that said, it's important to keep in mind that the business that you buy today is probably not going to be the same business 5 years down the road, 10 years down the road. These things aren't frozen in time. It's not static. These things are constantly changing and constantly evolving. And so you have to keep up with them. And that's why it's so important, if you're going to be buying individual companies, to make sure that you're actually willing to spend the time doing that, listening to the earnings calls, keeping up with the news, and learning more about them as you go. And that's kind of the interesting thing about investing in individual companies that I've learned, is that sometimes typically you end up learning more about the company after you own it versus prior to. You can do all the research in the world, but once you actually own it and have it in your portfolio, you do a lot of great learning from that point on.
Well, people only research a stock once it starts going down, and then they try to, be like, well, I gotta research it now. Yeah. It's not going up, right? So that's a mistake I see people always make. Like for me, like what I like to do is I'll keep like a watch list. Yeah. And then on that watch list, I'll constantly, whenever I have the free time, I'll be researching those stocks, especially if that stock is like not at the price I want to buy it at. So I'll probably wait until the stock goes down. But in that whole period, I'll just be researching that stock. So people need to kind of stop, because then what they realize is they'll buy that stock off of some rumor or some their favorite creator bought it, and then the stock starts going down, and then that's when they start going like, okay, I'm going to do some research. And then when they finally do the research, they realize that the stock is crap, and then they go like, shit,
Yeah.
On the flip side of this, there's no greater feeling than when you pull the trigger on an investment, you're taking all the heat, and then the stock starts to rally, or one of the big shots actually buys into it. And this actually happened to me with United Health. I bought United Health, and everyone was like, oh, United Health is going down. It's a crap stock. Why would you ever pick it? And like a couple months later, I can't say Warren Buffett, because I don't think he's really behind any of the investments anymore at Berkshire. But all of a sudden, right, the Berkshire team comes in and swoops up United Health. And I was like, let's go, like,
There were
but
actually
also look at,
many big shots that ended up buying UNH, even a bunch of hedge funds like Tepper and I think Dalio bought some UNH too. I don't know, but there was a lot of buys on that. So yeah, a lot
dude,
of people were happy.
I was thinking about getting rid of it, to be honest with you, to rally more on tech. And I mean, I was cautious about doing it. I was back and forth. We had our conversation around it. I was like, well, and I can't seem to get rid of it, though I wish it's hard to say. I wish I never bought it because I saw so many other opportunities in the
Yeah.
meantime. And there's opportunity cost there. So I'm still holding on to it. I mean, I hope this, I do
Mostly,
want to
like,
get rid of it once I get the
the way-
profit.
And I told you this to Ari, like the way I look at my portfolio is there's like certain stocks I'll hold forever. There's certain stocks that I know will take like 1 to 2 to 3 years for it to appreciate, and then there's certain stocks that I'll probably hold for less than a year, right? And I kind of divided my portfolio into like these kind of like segments. That way, it kind of helps because like it sucks when there's a very amazing, strong fundamental company, but the price is just not moving, and then you ask yourself, is the fundamentals broken or is the stock price broken? And like eventually the market catches up with the fundamentals, and I've seen this many times, and UNH is no different. Like, I cross my fingers, but I think it's a great company, Ari. And I've told you this. It's just one of those ones you're gonna have to sit and wait. And when it finally works out, you'll be the happiest guy, and you'll be a genius, and everyone will think you're smart. And then people will throw money at you, be like, "Please buy a stock from me, invest from me."
I'm sitting, man. I'm sitting on it, but I'm itching, because
yeah.
I saw during this time, I saw so many other opportunities, but I'm like, well, look, I still think I'm right with United Health. But just given my investor profile, I would have pulled the trigger in a different direction, And again, I'm constantly evolving as an investor.
It's the opportunity cost you're thinking about, right?
Yeah. Oh yeah, man. It
think
eats at me. I invested about 25K into United Health.
You know what? I tell people that like if you have a smart portfolio and like low capital, you're better off just cutting off a position and then kind of like going for those stocks that will perform well and are kind of like following the theme. So I'm thinking you're thinking of selling UNH, putting into one of these AI stocks, right?
I was gonna go more into tech, yeah.
Yeah. So I think yeah. So if someone had like very low capital, like I think that would be a great idea. You cut that position, follow the theme while it's still hot. But that can also bite you in the ass too, right? Because you don't know when the theme stops or when the bubble stops, right?
Well, also think about our timing right now. If the quote unquote bubble pops, I mean, United Health is a perfect hold for this time.
100%. That's why I'm saying that you should just hold it. Wait, Ryan, I'm surprised you're not biting up UNH. It follows your thesis, man.
Yeah, it's definitely been a great dividend payer, but truth be told, I just really don't get. I really don't understand insurance companies. And it's funny because we have United. Like a subsidiary of United Health for our healthcare, but I really just don't know how to look at them. And it's kind of the same thing with banks. I use Bank of America. I also have an account with Chase, but like I just don't really know how to look at them or analyze them, and so that kind of keeps me at bay. And so instead of putting money into something like that, I opt for things that are a bit more in my wheelhouse. But the thing with UNH, I will say, Ari, is I feel like you bought it so deep, and we've talked about kind of like this slingshot effect before, where the share price has really come down. It's almost like that slingshot being pulled back. And the reasons that the share price came down from what I understand are pretty like short-term things that they're working through. And so as soon as those things resolve, I would imagine this is kind of like what we saw with Johnson & Johnson this year. Which was like depressed for a while. I would imagine that when those things get resolved, that slingshot's going to be let go, and you'll see the returns that you're looking for in a pretty short amount of time. But for now, it's hard to hold on because it seems so dormant. But sometimes you see that with stocks where they don't really move they never move in the timeline that you want them to. But it seems like it's taking longer for something to happen, so you're just poking it with the stick. But then eventually, some catalyst is going to come along, or some issue is going to be resolved, or whatever was keeping it down will dissolve, and then you see it just take off. And so Yeah, that's kind of the interesting thing about investing. Sometimes we look at these, sleepy, more boring, stable
Boring,
companies
yeah.
like a, UNH or a J&J and think,
There's
oh,
been so many companies like that this year. So many
yeah,
companies that have been depressed. Like I remember looking at a company, Johnson was one of them, and I'm just like, oh, I know this is a blue chip, stable company. Oh, but it's not doing anything. I'm just gonna ignore it. And then a couple months later, boom, it's back to all-time highs. And then that's why I'm saying, like, for anyone that's investing, like if there's a strong name, best believe that it's more than likely going to recover back. Yeah.
yeah. And earlier, BD, you said something about, not trying to time the market. And I totally understand that. I think though that timing the market is different than timing individual companies because individual companies are not the market. You shouldn't really time like your buying of the S&P, just dollar cost average into that. Don't even think about it.
Yep.
But it's a totally different ballgame when you're dealing with these individual companies. There is undeniably a good time or a better time or a worse time, I should say, to buy certain companies. And so I think timing is actually important, and I think that timing plays a big role in the returns that you get over time.
Like honestly, 90% of the time, most stocks do follow the indexes, like the Nasdaq, S&P, Russell. But then you also realize like each stock has its own. Like if you're looking at it from a technical perspective, it all trades in its own little cycle because obviously it's got you got news to factor in, you got earnings to factor in, CEOs get fired, scandals, whatever. So every stock kind of moves in its own little cycle. But nine times out of ten, yes, it does. It does kind of follow the index. And you're right. Like till this day, for the last 2 3 years, I haven't stopped dollar cost averaging into the index. But everything else, I do extreme research. Try my best to time the stock with technicals. But yeah, like at this point, my strategy pretty much is dollar cost averaging into the S&P, the Nasdaq, Bitcoin, gold. These are the four asset classes that I will buy without any hesitance. And if there are red days, well, makes it even better.
Let me ask you this, if you don't mind, kind of switch gears a little bit. We're now past an hour in the conversation. There's 16 of us in this live stream, so thank you guys for tuning in and hanging out with us. But and this kind of ties back to some of the stuff we've been talking about, as it pertains to creating content or Blossom or whatever. I feel like when I first started making content in this space, and I think Ari and I kind of started around a similar time. So when we first started making content in this space, investing was still like a very, very niche thing. Not a lot of people were into this stuff. And historically, investing has always been looked at as this kind of stuffy, kind of boring, lame thing that you do. You don't really want to do it. It's like eating broccoli. You don't really want to do it, but you should do it. But I feel
like broccoli. I'm just got to chime in there. I had it tonight.
It's okay, but
I appreciate it.
It's okay, but I'd rather eat
No one cares,
Oreos.
Ari.
Tune out the noise.
Tune out the noise. There you go.
Trying to focus on what Ryan's trying to say.
Dude,
here.
I'm very bearish on broccoli. Let me just say going into 2026. Yeah. No, but what I'm trying to get at with this question is I feel like the investing space is really transitioning. And I want to know your thoughts. Like, do you think investing is now becoming cool? Are you noticing a shift there? What are your thoughts on this?
100%. Dude, like that's all me and my friends talk about. Like I'm talking about like my friends since day one. All we talk about now, like if we're gonna hang out, like best believe we're gonna be talking about stocks in the market. I've noticed like even when I go out in public, like it's such a great feeling when I get recognized and people want to take pictures and then people and my friends and family go like dude, you're not even that cool. Why are you taking pictures? I'm like, well, investing must be cool, right? But no, I absolutely love it. Like just the push, and I don't think it like investing is cool. I think being wealthy is cool, and people realize like everyone has that opportunity to be wealthy. It's not as hard as it used to be, right? Like now we're seeing people becoming millionaires overnight thanks to investing. But no, I absolutely love it. Like I love how the community is just growing. You have regular people posting about stocks and investing in their fundamental analysis, and you get ideas all the time. And back in the day, I would call myself stupid to go on Reddit or Twitter to look for like a stock pick or some research. But now it's one of my main tools when it comes to doing research, right? I got to see what the street is saying. I got to see what institutions are saying. Not only that, we have a lot of like these institutions and hedge fund managers on social media that are actually posting their content for free. So shout out to them. And yeah, dude, I think it's the coolest thing, and I think it's gonna grow. I think we're still in the early stages. Like we're gonna grow even more. But I also see the red flags behind it, because when we're starting to get to all-time highs in the markets, we start seeing like a lot of these completely brand new content creators, completely new in the finance game, that are just like spitting stocks that are not fundamentally safe, or they're not fundamentally sound. They're just gambling stocks. And people are also finding the good content creators, but they're also seeing the bad content creators. And that's also one of the reasons why I'm bearish, because I've seen this 3 times already over the last 5 years, is when we start seeing, this crowd of new finance content creators come. And I'm not talking about like your average. I'm talking about the guys that are promoting like XRP and just garbage penny stocks, right? And that's usually signs at the top, and it kind of makes me scary. And it's the same thing with when the dot-com bubble happened. When the market crash happens, certain companies will go bankrupt and certain companies will survive. It's the same with when a market crash happens. Some content creators you'll never hear from again, and then some will actually shine during the bear market. So my advice to viewers and people that are content creators is if you're going to be a content creator, make sure you're loud during the bull market, but you're also loud during the bear market.
Yeah, that's a great. Go ahead, Ari. I'm sorry, man. Take it away.
I just wanted to chime in and say, like, what a phenomenal point I think was just made in regards to, it's not necessarily investing that's cool. Being wealthy is cool. Buying your time back is cool.
Yeah.
Having
exactly.
a freedom is cool. And I think, before it's like keeping up with the Joneses, so to speak, like, you're playing that game, and to look wealthy is cool. But the new norm, or the new reality, is to actually be wealthy is cool. And I think, like, just taking a look right now, BD's in Costa Rica. Ryan just came back from California. My whole year was spent traveling, essentially, for about 7 months out of the whole year. So think about that. Like, we now have all these experiences based on how we, had income streams coming in and then invested it to grow wealth. Wealth is becoming cool. And I actually just created a video. It's on trial reels right now, but I'm going to release it tomorrow. And one of those like short clips basically just says, like, partying is not really living. That's not cool, right? Okay, cool.
Mm-hmm.
You're going out every night, getting blasted with a bunch of friends. You know what's cool? Having a great group of friends, and you're all actually going places in life. Yep. That's cool. And like BD, I don't know how I'm sure you felt the same way, Ryan. I'm sure you'll feel this next year when you join us on the Blossom Tour. But like, just being at the Blossom Tour, or any investing events, really, you're just in such a type of energy that can't be matched. And when after I left the tour, I went to I went to Mexico, Cabo, and I was just by myself in Cabo. I was like, man, I miss the energy that I was feeding on during the Blossom events. Not because, it was like with the mic in front of me and speaking to retail investors. It was literally because the people who were on stage with me, BD being one of them, our nights out were spent talking about things like investing, advancing your future, right? Like just becoming a better person. So I'm going to go back to saying this, like and I even see a comment there in the chat, right? I hardly know anyone in person who invests, but with YouTube, it made it a lot easier. That used to be me. I didn't know anybody, but here's what I did to change that. And this really changed a lot for me in my life. I started going to events. I started meeting people. I started reaching out. Ryan, I remember the first email that we exchanged. And from that first email that we exchanged, we've remained friends since. So my biggest recommendation is, instead of trying to look cool, go put yourself out there. Find some friends who want to advance their life and start changing your own life. That's freaking cool. Sorry about that rant,
or
but
put your
I had to
friends.
drop that.
No, great point. Or if anything, like for me, what my problem was, I didn't want new friends. I loved my old friends, but they weren't on the same track as me because what I started noticing was it's fun to take all these trips and be financially free, but it's not fun when your family and friends can't be with you on that trip. And if I'm gonna attain financial freedom, I'm gonna put my friends and family on that game, and that's what I did. Like I tried my like obviously they would ask me about investing, and I would not hesitate. The minute they said, "Well, BD, can you teach me how to invest?" I did not hold back. I did not gatekeep because I was so happy that finally my friend wants to, join this cult with me. And I would put them on investing, and I'm so glad I did because majority of the time when I'm taking trips, my friends are there and it makes it even more fun. And it comes back to your point. Like I've cut off all my friends that just wanted to party and spend money on dumb things because you're influenced by the people you hang out with. Your network is your net worth, right? And if everyone's broke and you're the only rich guy there, like that's not fun at all, right? And yeah, Ryan, you gotta come to the Blossom events, man. We'd love to have you there, right? Because it feels so good to be with like-minded people. We're all sharing ideas. We're all sharing ideas how to grow not only our portfolios but grow as individuals and grow our what do you call it? Being a creator, right?
Yeah.
And freaking Ari pissed me off because he'd be waking up at 5-6 a.m. to go on runs, and I was like, duh, I gotta wake up with him. And then we had that one conversation when we went to the Dunkin' Donuts, and yeah, it was amazing, man.
Well, don't worry, man. If and I'm definitely planning on coming to at least some of the tour events this upcoming year. 2025 and 2024 were a bit tough for me, but 2026 I'm definitely making it a priority. And if and when, don't worry, we'll definitely wake you up and make sure you get on that run because I'll be there too. So, yeah. And I hope, with that said, I want to throw this out there. I really hope they do one in Vegas. I really, really hope they do one in Vegas next year.
Oh, Vegas is gonna be
Would you
a
come
problem.
if there was one in Vegas, BD? Would you be here for it? Would you
Oh
come?
yeah, 100%. I love hanging out with the Blossom team.
Dude, if there's one thing I learned about BD spending time with him, if there's an event somewhere, he's there. Like
I try my
he's
best.
all in for helping people. He's all in for like what he just shared I think is if I had to like define BD or like just share what he's really about, he's there to help. Like I just even at the Blossom events, like just man, being on stage with you was epic. You literally wear your heart on your sleeve, and like you're not here preaching crap, right? Like you show up, man, and I think that's the magic of the circle that we're in.
It just comes back to like the whole reason why I became a creator was because I saw so many flaws and problems with content creators and not being transparent. So, I saw a problem and I fixed it and I try to be that solution. I try my best. We're not all perfect, but I think transparency is, if any creator is going to do anything, being transparent is like probably the biggest thing. And just to show that, you're a normal person and normal people can do these things that people pay like 1 to 5% fees, to your financial advisor, but you can kind of take that into your own hands, And the reason why I also go to these events is, like I get so many DMs where people are just like praising me like I'm some celebrity, and it's just like, guys, chill, like, you don't need to do that. Like, and then when I go to these events and it's just like, oh, you're just a normal guy. Yeah, I'm just a normal guy. Of course, I'm more handsome in person, but yeah, I'm a normal guy.
That's funny, man. Well, fellas,
hide your wives.
You guys, there you go.
Ryan, you're the only one here married, man.
Yeah, I'm scared. I'm worried. But fellas, I think this is a pretty good place to wrap it up. Unless you guys have any last thoughts, any last things you want to cover. I think we covered so far some really good ground.
I have one last thing to say. On the next, I was gonna come and attack you today, Ryan. That was mine and Ari's evil plan. But have me on the next podcast, and I'm gonna try my best to convince you to have some tech stocks in your portfolio. So my goal is to have you buy some tech stock in your portfolio.
So which one? Let's just go through this right now. I'm not taking any medicine. What if you were to pick one for me in the portfolio? Which one would it be?
if I was to tell you which tech company to buy.
Yeah, like give me some ideas. What are you thinking? And let's stick to the realm of dividend payers because that's something that I'm not really going to switch up from. And I think that I know that limits us, but like
Okay, well, you know what? One right now that I think is particularly at no, okay, fine. One that's a dividend payer that's at a good price right now. I would say is Meta.
yeah.
You can't attack it. You know,
No.
Zuck's got Instagram, WhatsApp, everything on lock. It's one of the biggest social media platforms. We're coming at a pretty low PE ratio as well. So I think it's fairly valued.
Yeah.
Yeah, just check it out. I think that one's a good one. I don't know how much dividend pays, but I don't think it's a lot.
They're
Depends
all
what
under
kind
like
of-
1%, but that doesn't
Yeah,
really
depends.
bother me. I mean, I have Visa. Visa's actually my largest position. That
I was
one's less
just
than
looking
1%.
at your portfolio, and I was glad to see Visa. Visa's one of my positions as well. So you know what? I think Visa kind of is a fintech company now.
Oh yeah.
You know what I mean?
Oh,
It's
yeah.
not just a bank; it's a fintech. You know. So I'll cut you some slack on that. You got some VOO, which is nice. You know, I never understood what Williams Sonoma is. That a furniture company?
It's a furniture company, and you know what? They're pretty tech heavy too. A lot of their designs now is, and actually a lot of their customer service and also their distribution and shipping, a lot of that's being run through AI. So they're really, really implementing a lot of technology. And I think at this point, something like 70% of their sales all come from e-commerce. So it is a really tech heavy company, even though it is, a consumer discretionary retail company. Very tech heavy, very involved with technology.
I am
so.
looking to add some more boring companies in my portfolio. I was looking at, I don't know if you guys know about these two Canadian companies. It's called Constellation Software. You guys
Yeah,
heard about
great
that?
company.
It's on sale right now. It's a freaking amazing compounder for like the last 10, 20 years. Definitely put that on your radar. I don't think
Yeah.
it pays a dividend. And then the next one I would say is probably Netflix. It doesn't pay a dividend,
Yeah.
but I think it's coming to levels that are pretty attractive. I did take a bite last week, and that's one of the companies I might hold long term. Like we're seeing Squid Games and this whole K-pop Demon Hunters. Like all my nephews and nieces are in love. So
Yeah.
I like to study what the kids are looking at nowadays. But yeah, I think those are companies. I think that should fit your narrative. Like they're not too risky. They'll survive
yeah.
the long term.
No, dude, and let me tell you, like, I'm totally on board with something like Meta. I'm totally on board with Alphabet. In hindsight, it's something, either of those or something I specifically Alphabet, we'll stick there. That's definitely something I should have added to the portfolio when it was
Long time ago,
earlier
yeah.
this year when it saw its crazy dip. But I think
was gonna-
one of the, I think
I was
one of
going
the
to say,
things,
man, if there are any companies out there for Ryan, Meta, we actually spoke about Meta the other week, BD, and so, it definitely still is an interesting opportunity right now. But Alphabet at the right price, I feel like would be Ryan's sweet spot of a
You know what?
all-in tech position.
Amazon is still pretty low right now. That's
But
something
Amazon
I don't
doesn't
know.
pay a dividend yet, does it?
Yeah,
I don't think so at all,
don't
right?
no.
I held Amazon for a while. It did well for me. I actually ended up selling out. I dumped a ton into Alphabet this past year,
Same.
and I'm still super bullish, man, on Alphabet long term. I mean, Alphabet
Dude,
I think is just going to be
I
a
can't
rock
believe
star.
how bearish people were on Google. Like, how were people thinking that Google was gonna die? I'm like, dude, they've been in AIs for like years, and now with their they just slapped everyone with their new TPU chips, right? The market is shaking. Nvidia's scared. AMD's scared. So Google is like one of those companies I will hold forever. I can say that I will hold forever.
I will say both of those are probably a little bit too rich for me at this point.
Yeah, can't buy that one.
Yeah, I on a pullback though, I mean, if we see a correction next year, we'll see what the share price of those does. Share prices of those do, I should say. And I definitely consider it. I was going to say a moment ago, I think one of the things that's kept me from really wanting to add either of those to my portfolio is that they're already such large positions in the S&P, and I'm already dollar cost averaging into that anyway. That's S&P makes up about 10% of my total portfolio. And so I just figured like through that I had the exposure that I was
It's still
happy
not,
with.
it's still not like the same return because like think about it.
Yeah,
Like,
I know.
yeah.
I understand that.
I see what you mean.
Yeah, I totally get what you're saying as well. But we'll see. We'll see. In the meantime, I feel pretty happy. I mean, Visa, not technically in the tech sector, but the company's all technology. If it's not all technology, I don't know what it is. Clear Secure, obviously very tech heavy, and as that grows, that will become a larger portion of the portfolio as well. But I would say Alphabet, Meta, probably in the top two that I would consider out of the whole
I'm gonna
tech
have
space.
my notifications on for you.
So yeah, and let me
Meta,
know.
I will be the happiest guy.
Do me a favor. Let me know, like if you're like, hey, Alphabet's pulled back, Meta's pulled back. I think now's a good time to buy, Ryan. I'll see you post about it. So I'll just
I'll make a post. I don't.
Oh yeah,
sleep when it comes
Microsoft,
to a deal.
of course,
I don't like
Microsoft too.
Though.
But I would
like
sooner,
Microsoft.
I'm with BD. I don't like it.
I would sooner invest in either Alphabet or Meta. Yeah. And to be honest with you, between those two, I mean, I know Alphabet has YouTube, and obviously I have a bias towards that, but my goodness, man, Facebook and Instagram and WhatsApp, Meta's just a behemoth. Like, people are addicted to these things. It's you could make the argument that it's a sin stock for that reason, just the amount of time people spend on those. And so, for that reason, I probably would opt more towards Meta out of the two. I don't know.
I mean, yeah, it is coming to extremely attractive valuations. The only red flag is like the amount of capex and spending they're doing on AI. So
they just pulled back.
No, they pulled back from the metaverse.
Metaverse,
which was a great idea. About time they pulled back.
Not AI.
Not AI, the metaverse. Remember metaverse? The whole.
Yeah. I thought I read something about them cutting back on AI, or maybe it was. Forgot what I read it a couple days ago.
It's called Reality Labs or something, but that's pretty much the metaverse. Yeah, so yeah, they made an announcement that he's finally going to stop spending and investing into Reality Labs, which is the metaverse, and he's pretty much going to be using that money to double down on the AI infrastructure. So a lot of people were happy because if you go pull up the chart for the revenue they got from the metaverse, it's just declining. It looked like it was just bleeding money, and just it's a good sign for investors that they're going to stop bleeding money on something that's giving no return on investment. But now we got to cross our fingers, and hopefully that doesn't happen with AI infrastructure because, dude, he's going all in.
Yeah, and I will say, to your point, like all the capex spending that we're seeing these companies do, that's definitely been a topic of discussion. And kind of like you were saying earlier, people are concerned about the returns or lack thereof from all that capex spending. And so I do think that could be something that puts downward pressure on the share price if it turns out that the spending's not really bearing much fruit. And so if I was to buy either of these companies, and I really would lean more towards Meta. So if I was to buy Meta, I would wait to see how that plays out, thinking that there's probably inevitably going to be a time where the share price pulls back a bit more than it has over the past, couple months, or really the past month. Looks like since like mid-November, it's taken a bit of a hit. But I do think there will be a time where you could buy it at a considerably lower share price. So I would wait for something like that. I'm in no rush. And like I said, in the meantime, I'm still buying it every week through the S&P. So there is that.
Yep.
So does that satisfy you guys? Are we on good terms now? Are we good?
I don't know, Ari. What do you think?
Or am I still in the doghouse?
I'm not happy till you pull the trigger. Then I can say my friend
peer pressure,
Ryan
man,
is not a dividend investor.
Well, I still would be. So actually,
no, it's not the same.
Yes.
Fine.
So this is an important point. So when I say that and I think certain companies in my portfolio certainly prove this.
You just want to keep the title of being a dividend investor. That's it.
Yes, but here's what I mean when I say I'm a dividend investor. I'm not searching for any particular yield. I'm not searching for specific dividend stats. I just want the presence of a dividend. I like having at least some of that cash-based relationship.
I got some advice for you. Go and buy some Yield Max ETFs, all right?
Okay.
Sure, you'll see your money depreciate, but you'll get the dividends you want and love.
All in on MSTY. All in.
Oh my God.
Sorry, then I'll join you in Costa Rica.
Yeah, your dividends will pay for everything here, but your wealth will depreciate. But doesn't matter. Stay income.
Doesn't matter, man. YOLO. Anyway, guys, I think this is a good place to wrap it up. What do you guys
Yeah,
think?
yeah.
Ari, you want to take us into the end zone?
Yeah, since BD already mentioned it, I want to say it again. Hopefully, BD, we do have you back on and pretty soon, because this was a powerful episode. But right down to the very end, we got to hold Ryan's feet to the fire. And so when we see Meta or Alphabet drop, BD's got to come right back on to make his case even stronger. And I think, if anything, the big takeaway for this episode is surround yourself with people who are going to make you just a better investor. As you see, all three of us are here right now, chatting it out, hopefully challenging each other, just making each other better. And so we hope that we did just a little bit of that for you this episode. And of course, until the next go round of the deep end, we hope you'll join us in the next chat. But until then, we'll see you there.